Hi traders, this is Brad Gilbert with the Daily Market Insight for Friday, the 1st of September. All right, now let's just have a look where the market is. Dollar gains on solid data, right? We had some second tier data yesterday come out a little bit stronger. We're on the stronger side, not outside the sort of general ranges. But I tell you what, it really highlights how volatile the market is at the moment. It's reacting a lot. They've sort of been starved of really key driving numbers. Top tier numbers, but we'll get that later today with the non-farm payrolls. Now, the US consumption numbers, 0.8, right on the high end of this expectations. The US, like the jobs, right? We've seen this all week. The jobs data is impacting big time. Now, a lower number, that's good, right? That's better, okay? Right close to the range of expectations. So you've got two numbers there working together. And what we saw across the board is a pretty solid move, right? Like a nice bounce back for the dollar. So, and you see this on the dollar index. I'm just sort of leaving up some of these old trend lines there, so you can see how much carnage we're seeing on these numbers. Now, the like this move back down here on these on the data yesterday, to me, it's like exaggerated. All these moves are exaggerated at the moment, and it's because the market's almost on fever pitch with what the Fed are going to have to do now. 80% chance unchanged next month. And they're winding back. I think it's back down to about 45% for a potential rate hike in November, right? So they're already winding that back, which brings the US non-farm payrolls into play. So if I have a look at the numbers, once again, what we're looking for, okay, well, let me just come through what we've got over this next, 12 hours, 12, 14 hours, 16 hours. There's a bits and pieces coming out on a few different things, right? Nationwide house prices in the UK, Swiss inflation numbers, some manufacturing numbers there out of Europe, and GDP numbers out of Canada. Now, these numbers could come in and play, but my experience is when there's a massive number like the non-farm payrolls, the market will just let these things go unless there's really dramatic numbers, right? Unless there's a big change. CAD GDP numbers coming out at the same time are going to get dwarfed by the employment numbers. Now, we've seen it all week, okay? As I was saying, like you've got a huge amount of data here. So if you're planning on trading these with pending orders, you might want to think again, because the volatility that I'm seeing off second and third tier numbers, it's pretty big, right? This is like top tier or even one of the most aggressive numbers. And it's because it impacts the market, but also because there's so many different variables here, right? You can have some up, some down. If they all line up down, you get a massive move on the dollar. So the two big numbers let me just get that to look at are the non-farm payrolls and unemployment rate. And the third number to watch is the average earnings. But the job openings, ADP employment numbers, the jobless claims, they are rock and roll wild numbers at the moment. So looking at the consensus here, actually, let me just come over to News Squawk. We'll get some of the solid numbers there. So expectations, right? 170,000. The range, very important. See, I don't know if this range is widened out to the downside, but 40K to 215. All the other numbers well, not all of them, the jobless claims were a little bit stronger, but have been showing sort of some sort of weakness, right? The people don't expect too much on the top side, but they do have a lot of room to move on the downside. And with that average, right, that's what that expectation is, the average of all the people or companies that have put in data, it's pretty close to 170. Like there must have been a couple of outlier numbers to get that 40K there. So anyway, it's going to be very important what happens here. This number here will be the key, right? The second number to look at is the unemployment rate. 3.5%. They're not expecting much. With the way the other numbers are going, you might think it might blow out to 3.6, and the average earnings 4.4, with the range 4.3 to 4.5. Now this is going to be explosive, right? Just before the release, liquidity, the banks will pull their liquidity out of the market and the spreads will widen. Now, on your MT4, MT5s, it might look like there's some prices there. They'll have no depth, right? So the banks still leave things there, but it's minuscule liquidity or volume. So when the market goes to hit, there's nothing behind it and it disappears. That's what you're going to avoid. But we are seeing how dramatic the numbers are. Now, match this up with what's happening with the Fed, or where they're sort of being not pushed into a corner, but the numbers are weaker. Okay, except for a few little positive signs yesterday. So if the numbers are somewhat closer to 40K, we are going to see a big shift down in the dollar. They'll start unwinding any possibilities of rate hikes this year, and the dollar will fall. If we get a number up above 215, well, you know what? All the weak numbers we saw earlier in the week, they'll be pushed aside. The dollar will rally aggressively. Equity indices will come off, and that's what you've got. So there's a lot to play for here. It should give us the general movement for the dollar, or directional momentum for, the next, like, we've got a week, I think it's a week and a half till the US CPI numbers. So we've got a bit of time to wait. Now, after the non-farm payrolls, don't forget you do have the ISM manufacturing numbers, right? So just keep an eye on that, on things, because if we get some sort of movement after the non-farm payrolls, well, don't just sort of sit there, pat yourself on the back, get into a position and start riding it till it, till the cows come home. Just keep an eye on the ISM manufacturing numbers. They come out an hour and a half later. They could come into play. All right. And that's pretty much it. It's a really good situation to have, because, and what I'm talking about is now the, sorry, I'm just coming over to get the currencies up. The what we're seeing across the board is good movement on the major instruments. Okay, equity indices chopping about a bit all over the place, but we do have movement we can work with, right? And the move down here in the dollar index back up, we get weak numbers. It sets up for a much bigger move to the downside, and vice versa for euro will be screaming topside as well. So the key to isolating the best trading opportunity here, always focus on your best trading instruments for sure. Let me come back to this other screen. I think I've updated the charts there. So you can see how much volatility is in the market. So maybe just adjust your plan somewhat. This is a volatile number with 5 or 6 variables. Maybe decrease your trade size. You don't need to make $1 million on this, and there's a big chance you get flushed out before it gets going. So just think of redo your charts and your analysis as it comes up to the time of the release, right? Check your overall markets, see if there's a clear risk on or risk off profile. At the moment, this is like textbook, right? The US equities are going up. Euro, sterling, Aussie, Kiwi were in the blue there a second ago, and the dollar's falling against everything. So that's the structure. As it comes into the non-farm payrolls, that's where things are going to potentially change. But say we had the equities going up, like a risk-on profile, and you got the dollar falling against everything, well, that's something to focus on, because if we get weak numbers, it even supports that current move, right? So you get a bigger move in the current direction. If the data comes out opposite, well, you're going to see a turnaround dramatically. The dollar will rally. Okay, the equity indices will fall, and that's what we've got. Okay, so there's structure to this. You don't need to make it difficult by trying to trade too many instruments. Get your favorite one, the one that you make the most money on, and if that's got the best technical setup, we'll stick to it. Okay, ideally, when you are looking and trying to isolate an instrument that does have that you are going to trade, to me, I always come back to which of these instruments has a good setup. Right. And actually, let me have a look at the overall trends, what's happening. There's potential breakdowns. This number could reverse things. And what you want to be doing is really coming back, isolating your trend lines, almost redoing them to where all the carnage was this week. And that way you can really isolate the key levels when this data comes out. You don't want to be doing this, like your analysis as the data comes out or just after, excuse me, because you're going to get left behind, right? So to me, get your data done. I'll get your homework is basically do your analysis, know where the key levels are, where they could rock and roll a bit. And that's where you can find the nice entries. We just need the direction, and hopefully it goes with current market activity. All right. So, and don't forget, don't overthink your technical analysis. Just draw your trend lines. It's not about thinking at this point. It's more about isolating the best levels. And from there, we can piece the plan together. All right. So that's what I'm doing right now, is just cruising around, looking for the key levels that I know will be in focus. And then the picture looks a bit different, right? Because if you do draw these trend lines, okay, we're just trying to draw them to find out where the market is going to get more aggressive with the momentum shifts. And even though these are short term, they will provide the answers. All right. So if I just come back and have a look at those charts now, okay, you've got levels topside, downside. You know, sterling right in the middle of the range, Aussie at the top of the range, Kiwi at the top of the range there as well, right? These ones that have already broken down significantly, I wouldn't be redrawing the support lines at that point. Dollar Swiss has got levels both sides, and we've got the dollar index coming back to test that old support line with resistance above. All right, that's how my charts look. Try and the other thing is too, don't put pressure on yourself when you are trading something as heavy as the non-farm payrolls. Understand, regardless of what sort of rubbish marketing or things you get saying, non-farm payrolls, get busy, trade it tonight. This is a difficult number. Trading the US CPI numbers is 10 times easier because it's one number, right? We've got a lot of variables here. Focus on the employment numbers. Okay, as I was saying, the non-farm payrolls is the key number. The secondary number is the employment numbers. And the third number, the average earnings, right? But this number here will be what will rock the market, okay? And that's your range, 40 to 215. Just keep it real, right? You don't want to have a situation where you get kicked out of a trade because of liquidity issues, right? When the liquidity disappears and it goes your way, it's a double whammy. You'll be frustrated, you'll be angry, you'll be down cash, and you got it right. Just decrease your trade size, widen your trade plan, even let the numbers come out. Right, that's what I'd be doing. All right, guys, have a good one. All the best. Cheerio.